Now let's go ahead and shift to the VIX, and we will highlight why we are still looking for a little bit higher here in the market. Now we are, if I zoom out on this chart, you can see very clear patterns here in the VIX. We are very late in the cycle. We are getting a modest pullback, but note what's happening here. This is forming a much higher low versus that prior low, a big base in the VIX, and likely setting up another impulse back to the upside here as we finish out this cycle around the middle part of June. So that's what the highest odds favor in this time window, where there is risk on the downside in the VIX and likely upside in the stock market. Once this low forms, we will look for that next impulse to the upside in IVs and likely drop in the market. Let's shift to the daily. You'll see what we're looking at here on the daily. Again, this is that time window, and you can see what's happening. If I zoom out here, you can see this big base that's forming here in the VIX with this higher low that's in all likelihood going to form here. We are in this window of time where there is risk for a move down. You can see IVs are holding up, which is just indicating the likelihood of more hedging going on here in the market, as people are not really convinced that the worst is over. That's why we aren't seeing these big washouts like that on the downside. This is really staying fairly bid in the VIX. So what we're looking for is a likely push out into that middle part of June time period, that window of time where we're looking for a bit higher in the market, after which we look for that next surge back to the upside in IVs and consequent drop in the market. So that's the overall picture in the VIX, looking for just a couple of weeks time where the market is likely to chop its way sideways to up. VIX likely stays fairly bid, but gets a little bit choppy to down, and then look for that next surge after that middle part of June time period.